I thank you, TBS and JSE, for the opportunity. I originally thought I was coming along to present the company to investors in Africa, and I'm always keen to do that. But I feel that was something of a ruse to get me in the room, and I expect I'll be pinned down by the JSE and Standard Bank after this to commit to a secondary listing in Joburg. So well done, your plan has worked. Maybe we'll make it a bit interactive. After you hear the story, you can tell me with a show of hands if you think I should take it forward and look at this in the South African context. Are these slides going to... I mean, before I start anyway, I do have some experience of advising on secondary listings as a banker, and I've had two roles in investor relations now, 10 years of investor relations, living with dual listings. In the first case, it was a Hong Kong listing, was the second listing. And in the current case, it's London, primarily with a secondary listing in Vienna. I think accessing additional investors is always a benefit. And I would agree the quality of interactions that I've had with South African institutions is always top notch, certainly compared to London, as was mentioned earlier. I think the way companies look at it, one, is there any additional cost? We're told not. There's upfront costs, there's ongoing costs. Management teams don't like costs for no reason. There's also additional administrative burden sometimes, particularly with Hong Kong. I found that with the translation or some incompatibility of the listing rules between Hong Kong and London too. It seems that with JSE, they've got a more of a streamlined setup. So therefore, that's a positive. And finally, will it work? There are plenty of examples of companies, especially smaller ones, that have gone out and done secondary listings, and then the liquidity never quite arrives for one reason or another. So it's really good to see there are companies doing that right now and getting a good result. So there we are. So hopefully I'll give you an example of a company today with a truly global business. We chose to list in London. We don't have any operations in South Africa, but you will see we have some very important customers in South Africa because of the nature of our business. So just quickly, some numbers. 1.5 billion market cap, an EBITDA of just over 400 million, an EBITDA of 543 last year. I would say it's probably the highest EBITDA FTSE 250 company you've never heard of before, and that's my fault. The company was formed in 2017 through the merger of RHI, an Austrian company, and Magnesita from Brazil, and was listed following that merger in London, which was chosen as the primary market because it was a neutral market from an Austria and Brazil perspective, and the best, judged to be the best place to list at that time. We have a secondary listing in Vienna already for takeover reasons, regulation reasons, but all the liquidity is in London. We have 7 analysts here and 1 in Vienna. We pay a regular dividend. It's well covered by earnings. And we've had really stable margins over the last few years, despite lots of volatility in our markets. And we're executing a major M&A strategy with 11 acquisitions in the last 3 years, with a total deal value of 1.2 billion so far. Quick introduction to the senior management. There is a strong SA link here. CEO, Stefan, from a chemicals background, it's not the SA link. Ian Botha is. And for those of you who maybe have experience of South African listed companies, Ian was at Anglo American for 20 years and for several years was the CFO of Anglo American Platinum. I'm pleased to say that RHI Magnesita is now benefiting from his extensive experience and leadership, and it's a pleasure to work with him, actually. Okay, refractories. Hands up who's heard of refractories before? 1, 2 people. Okay. The person in the street does not know what a refractory is, but everything you see around you that's made of metal, glass, concrete, cement has flowed over or touched or been contained within a refractory lining in its manufacturing process. You cannot make any of these things, which we utilize in our daily life, without refractories, and they get used up. They're a consumable item, like the soles of your shoes or the tires on your car. It takes 10 to 15 kilograms of refractories to make 1 ton of steel. It takes 4 kilograms to make a ton of glass, et cetera, et cetera, et cetera. So it's probably the most important product you've never heard of. Most of it is used in steel, 70% of revenues, and then going down the list, cement is the next biggest, non-ferrous metals, glass, and there's also important energy and chemicals applications as well. This is what they look like. This is a steel electric arc furnace, and when we say linings, I mean, there's a lot of the stuff going on there. You've got the working lining, you've got the permanent lining, you've got the hearth, you've got all these pieces of equipment. Everything inside that furnace operating at 1800 degrees centigrade has to withstand the heat of the steel, and it gets used up over time. So as you use that furnace, the lining burns away. Let's skip through. So we have 47 plants globally. We've got sales offices everywhere. We have production in North America, South America, Europe, India, and China. We don't have production in Africa, Middle East, or Australia. They're slightly smaller markets, so we serve them from elsewhere. But usually it works best if you have your plants close to the customers. Uniquely for refractory companies, we actually have a high degree of vertical integration. So we actually produce 50% of the raw materials that we use ourselves from our own mines. And that's primarily something called dead burned magnesia and dead burned dolomite. So we make additional margin from the mining business. And actually, our mining operations are quite significant in their own right. This is Brumado in Brazil. It is by far our largest raw material site. It's the most strategic. There's 100 years of high quality magnesite reserves there, 200 years of mineral resources, and that's just what we've drilled. There's more there, but that's just what's drilled. This site could, if needed, supply the whole world with refractory raw materials, and it's the only one, or the major one outside of China. So sometimes for some of our customers looking for a non-China supply chain, because most of these materials come from China normally, this is of great interest to some of our customers. We have many sites. Here's another one. This is one of my favorites in Austria, where I live currently, in Hochfilzen. This is a long-established site for dolomite and magnesite production. Its products from here go globally, and if you walk around the goods yard, you'll see shipping labels with all sorts of destinations. It's really a site of kind of global significance, I would say, in particular for electric arc furnace hearth mixes. M&A, I mentioned 1.2 billion spent. We're currently in the process of completing a deal in the US, which we hope to complete in Q1 for 400 million. That's quite a major part of our kind of capital allocation strategy, is to round up and to consolidate this very fragmented global industry. Last two slides. I think people often make the mistake of assuming that since we're closely involved with the steel industry, that we share the earnings volatility of our customers. And this is not the case, actually. It's quite a defensive business. We have the upside when times are good. But as you can see, there's a 20-plus year track record here. The red line is the EBITDA margin. It's positive. You've got major downturns and cataclysmic events happening in there, and it sort of dips from 15% down to 10%. That's because these products are so essential. You can't make anything, as I mentioned, without them. So passing on the cost increases, passing on inflation is very easy for us to do. And that results in this very good track record. We've managed to hold margins up. We're in a downturn right now. I don't know if you know about this, but it's a pretty hefty one in terms of steel, and we're very healthy margins at the moment. The last slide is from our 2023 results. Definitely for the investors who may be out there. I mean, some of the yield numbers might be different from February when I last did it, but we are the red bar in every chart. The dark grey ones are the FTSE 100 industrial peers, and the light grey ones are the FTSE 250 sector peers. We have the highest absolute EBITDA in the index, in the FTSE 350, third highest. There's only two FTSE 100 companies bigger than us, and it's pretty close. We've got a cash flow yield of 14%, which speaks for itself. And we're deploying that free cash flow into accretive M&A. We make sure shareholders get consistent value from the dividend, and that's a yield of around 4% at the moment. And you get all of this for an EV/EBITDA rating of 6 times and a PE of 7. So I think it's possibly the most profitable and interesting FTSE 250 company you haven't heard of until now. And that's partly to do with the history and how it listed, etc. But if you ask any steel producer, metals producer, who's the world leader in refractories, they'll know exactly who you're talking about. So my contact details are on the website. They're in every announcement that we make. As an investor, you can register on the website for updates, etc. Happy to give one-on-one calls. But having heard the story, I think there's quite a kind of strong tie with the metals and mining industry. And therefore, on the one hand, South Africa-based investors will be comfortable with the drivers behind our business. However, if they're looking to diversify away from metals and mining, then maybe that's not going to help in that sense. But what do we think? Let's have the show of hands. Should I be looking at JSE listing? Looks like we have a small majority for pursuing that. Okay, thank you very much for the opportunity, and let's move on.
Thank you so much. Good, ladies and gentlemen, I am back with a very important but a short job to do. That is to close us up and to thank each one of you for your participation, and to thank all the teams that have made today happen, from our gracious hosts, UBS, from our partners in the ecosystem, the bankers, PSG, Standard Bank, JP Morgan. Thank you so much for your support, and a massive thank you to the whole JSE team that's been on the road for a week now almost, as well as to you, our gracious audience. Thank you so much for your time. Please do join us for some drinks and some more networking, and any more questions that you might have for us or for our guests. Can we give yourselves a great round of applause?